Back to stock markets and stocks in particular. Our special series, Hunting for Value, will focus on a company which has done about almost 40% this year so far. The analysts across the street are betting on the restructuring of the loss-making operations of this particular company. So is the street ignoring some of the coming improvement which may take place? Anisha is here with that stock and I mean just the 360-degree viewpoint on why there may be value in it. Anisha, over to you.
Well, yes, the stock that we are talking about is CG Power, and that's because the stock is trading close to its 2-year lows right now. Now, remember, the delay in resolution of loss-making international business and the lack of transparency really had the street worried. In fact, the gash became more profound after the Q4 numbers. As you can see on the chart, it was down about 25% after the Q4 numbers. So what really accelerated this down move? First up, the sale of the loss-making Hungary business, which has been the Achilles heel for the company, got further delayed to June. Now, remember, this business adds close to 100 crore losses per quarter, and hence we saw FY19 EPS being cut by analysts anywhere between 20 to 50% post the Q4 numbers. Now, resultantly, despite the price correction, the valuation multiple still remains a tad bit elevated. Now, to add to the nervousness, the company also reported some write-offs in the quarter gone by, totaling to around 400 crores. Now, what is actually spooking the street is the timing of this recognition, and this is raising eyebrows because the auditors of the company had suddenly resigned with immediate effect in April, and the Q4 audit was signed by interim auditors. Now let's analyze what can be the potential triggers for this particular stock. Now the Sanjeevani booty for the company, or the re-rating trigger as the analysts call it, can be the sale of the loss-making Hungary business. Now remember, the initial guidance was the sale in December, that got pushed to March, and now the guidance is around June, and it's only 15 days till the end of June, and we haven't heard really any update on that. So important to point out that. Other than that, the appointment of a Big Four auditor can also act as a potential re-rating trigger for the stock. Now remember, the company had earlier mentioned that due to some conditions precedent to a fundraising plan, they had to change their auditors, but the lack of appointment of the Big Four auditor has investors a tad bit nervous. Also, the clarity on the possibility of further write-offs will go a long way to build on the trust of the investors and improve the transparency. Now, the company is also taking a debt resolution plan which will help them to bring down the interest costs, and the overall financial performance of the industrial business is expected to improve, and that can be a potential trigger. Now, 5 out of 15 brokerages actually have a buy call on the stock, while only 4 recommend selling, and 6 of them advise you to actually continue holding the stock, given the fact that their consensus price is around 75 rupee per share. That leaves you with an upside of around 20 to 25%. Motilal Oswal, for example, had cut the estimates of FY19 EPS by a whopping 46% post Q4 and has a neutral rating, while Macquarie believes that the selling in the stock is overdone and the street is completely ignoring the improving fundamentals of the standalone business. Now, let's take a quick look at how the peers are also performing. Now, a quick look at the P metric will tell you that CG Power is still not, essentially very cheap and is trading at a premium versus to the peer at 19 times the FY19 earnings. Hence, while the analysts do believe in the turnaround story, and that could be a potential trigger, the investors are a tad bit nervous about the Hungary deal, and the fears are not completely unfounded, let me be honest, because given the past instances, we have seen the deal falling through. So that is perhaps something that is spooking the investors, but the analysts, they still remain positive. However, a standard disclaimer, this analysis is not a recommendation at all. It is just a collection of facts. Back to you.
Absolutely.